In less than 24 hours, we're about to find out whether inflation is back. Have the tariffs taken hold, or are the markets absolutely correct? Short squeezing seems to be the big play at the moment, with markets moving towards the next big options level. And in today's video, we'll discuss everything about the flows right now from the biggest players on Wall Street. From small caps all the way into Tesla squeeze against the news, what is going on? Well, one thing's for sure, there are a lot of opportunities and we need to break them all down. Stocks, commodities, and cryptos, let's explore them all right now. See you soon, guys. This one is not to be missed. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have some big news. The latest macro, the data, and those key flows. What have insiders been doing in the markets, but more importantly, their hedge funds? They're pretty behind in their current investments. What does that mean? We'll take a look at it. Quick announcement before we jump in. If you are lucky enough to be in Melbourne, Australia, or Melbourne, as a lot of you Americans mentioned it as, then we do have a trading event. It's totally free to sign up. It's on the 2nd of July this year, and we will be providing drinks as well. Make sure to get to it if you can, as we are sharing information about the rest of the year that we've never done so before. So make sure, if you're able to, do it. Links in the description. Let's kick things off though by talking about where we are in this current market. And of course, we are starting to move into some uncharted territory. We now see more US households owning stocks than ever before. And you might say, well, that's a great thing. And it is, but it has also tended to be around points of euphoria. The last time we saw so many people interested in stocks was 2021. Guess what that was? The rise of arcade, the rise of hypergrowth. And if you've watched our last two videos, we've discussed the idea that hypergrowth is back and risk is on in terms of leverage. Investor pessimism turned into optimism. According to the latest macro charts, we're seeing equity inflows now going super positive. And as we reach new all-time highs potentially soon, then we are also seeing a huge amount of leverage coming in the 3 times levered funds. Could we be seeing a lot more before things get worse? Technically, yes. We've talked about this quite a few times. Even any kind of pullback needs to be purchased by several big entities that are currently behind in this market. And yeah, hedge funds are super behind. You'll be surprised how bad they've been doing in 2025. They were short, but they haven't been able to buy back in. So remember, dips may be purchased by some of the biggest players. Global equities as total market cap. I love this chart. As you guys know, there is something called the Warren Buffett method, which is based on, of course, total market capitalization versus GDP of the US. It was a great concept back then. I believe it's a great concept as global GDP now, as of course, if we look at all of the equities and we then say, well, how much has the countries over there or in the world actually grown? Are we overpriced or not? Well, we are in dangerous times indeed. In the world of globalization that's now becoming less globalization, we're starting to get near some of those huge zones. Something we saw in 2020, something we saw in 2000, and of course, something we saw in 2008. In many ways, this could be one of the best reads of the market, and I believe it's why Warren Buffett obviously has been building that cash reserve. Because remember, he kind of coined this idea, although this is a bit of a pseudo version of it. But are you scared of this chart? This could be one of the biggest ones that we need to continuously talk about throughout the rest of 2025. Insider transaction ratios. It looks like insiders have actually started to go a little bearish. It looks like there's some selling starting to appear as markets rally. I'd say this to do with tariffs. Of course, we do know that if tariffs are global, from the superpower being the US, and they are sustained, they create initial massive gains. That is, you see a huge amount of demand and you see not enough supply. Then what happens though is that tapers off, as we always have seen in the past, big organizations over ordering, thinking it's real demand, and then it starts to come down as we get an oversupply. Now that can lead into recessions and depressions. However, it usually takes some time. 6 months usually minimum, and anywhere up to 2 years in terms of maximum. Now, if we do continue to see the tariffs hold, which I suspect we will, but I've always asked you guys, and you guys seem to think it will as well, then we could be heading for that. And we have to keep that in the back of our mind as well. Rate of change, one of the best reads in the market. Usually you're using a rate of change around 14. generally shows us strength in terms of breadth. Now, we've talked about the Zweig breadth thrust and the de Graaf and everything else, and we know that this market should be able to sustain a 6 to 9 month run from the lows back in March and April. But at this point, it is a historic oversell and now a historic run to way up. We've actually rallied the 20.4% over the last 41 trading sessions, and that's the third best run in a century. That means that we've only seen this 3 other times in 100 years of market data. It is wild times. And you might say, well, that means it's a resilient market and it's glorious. The thing is, generally speaking, when we see these rallies, we're coming off historical crashes. We're not coming off necessarily just a 20% pullback in markets. And it makes you wonder whether this just shows you how many bulls are out there and the fact that the animal spirits of the bulls are so strong. We've been conditioned to buy the dip without any thought of the market not being supported by the Federal Reserve or the US government. That's been fine for now, but we do suspect, and this is in our advanced course, links in the description down below, that there is a repeatable concept that's been happening for hundreds of years that is starting to appear, and it is kind of toxic. And of course, we will start to see the crack showing even more so, especially in the bonds market, we believe, over the next year in particular. Russell 2000 versus S&P often is considered that the Russell will be one of the last things to run in a euphoric kind of bull market. Are we down at similar levels to the tech bubble? Are we about to see the Russell start to power through? Well, it does have one of the better setups at the moment. And actually, US small caps already went into technically what a recession would look like. You can see here, according to the latest JP Morgan data, that peak to trough moves over the last kind of 30, 40, 50 years, we usually only see around 30 to 50% down. And the Russell did actually do this. And of course, it has been a superior underperformer. So it looks like the street's starting to move some flows into that. Now, a lot of people ask me, has the market peaked? Will we peak in June? Will we peak in July? Will we peak in October? Historically, it's October, November, December 24 peaks, by the way, January 5. So if you're thinking, are we going to peak in June? We said this actually last year on the show, and we say it again. It is unlikely for us to see a market crash that comes in June. Historically, it just hasn't tended to happen. So, of course, that is an interesting stat in itself. And we've started to see, of course, a little bit of purchasing in by some of the bigger, not insiders, but some of the bigger Wall Street players, at least in recent weeks, off some of these lows. Goldman Sachs global CTA estimates, they've just reported their latest, and most of the metrics don't actually look that positive. All of the upside potential is muted, so that basically means only maybe a little bit, 6,100, 6,125, maybe all we get in terms of seeing this gain right now, and then it may say sideways for a while, or what we call a pit or pullback in time. And then of course we've got these significant declines from Goldman Sachs in terms of their modeling. So just remember, the CTAs, they have been picking up, but they're not being modeled to be that good at gains at this stage. Now, we mentioned that it looks like hedges are super far behind. So they are so far behind. Hedge funds have been kind of underperforming for years now as they've gone short throughout 2022. They didn't really buy properly back in during 23 and 24, worrying about a recession. Then they went heavily short in 2025, looked good for a bit, and they have only just started to buy in. They should be already back up at here or this point. So really, this again could be an underperformance year for hedge funds. And if it is, then of course they may have to buy back in. And what we're starting to see is that every single one of these bearish setups, such as the one we pointed out on Bitcoin, are getting reversed into bullish squeezes. A head and shoulder setup on Bitcoin turned into a squeeze. That's looking really positive. A lot of you guys, by the way, had the target around my target, which is 125 to 130. Some of you had $250,000 for Bitcoin this year, so you guys had a lot. But look at this. I think Bitcoin futures is kind of giving us a little bit of transparency to the market. BTC future short liquidations. Wow, look at that. They are getting smoked. Poor shorts, they are getting smoked. Hopefully that is not you guys out there. Look at this, nasty, 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 huge liquidations. Love the Glassnode data. We'll be bringing more of this to you as we see Bitcoin starting to show really good forward signs for some of the market risk on. And you'll notice that was just huge. Another one is that dreaded Ethereum. Yeah, that second coin, the one that looks like a diamond, except it's not a diamond in a rough. It's more of a horror show in recent times. But you can see here, Ethereum broke out over the last 24 hours. We've been talking about this. I just been seeing it as well on X. And you can see here, All-Star Charts also seeing something similar. They've got it kind of as a pennant. And you can see here, big rally up, nice coil. I don't care what we call this pattern, doesn't matter. The point is that we've broken to a new high. And at least for me, I think the 3,200 level is very interesting for Ethereum. And we've got that chart coming up later on today. S&P 500, we know the key levels, 6,000 plus breaks. The idea is that we would probably go towards 6,100. Well, that did happen. We have CPI inflation numbers coming out 1 hour before the market opens on Wednesday. And at the moment, the market is trying to squeeze higher. So at least across the board right now is we're basically just seeing bullishness. Even with NVIDIA, you can see here, if you look at all expirations, and we've got this week's expirations coming up later on, you can see here 145 plus to 150, 150 plus is a massive call level. And if we get through that, it's going to be a squeeze in semiconductors, which we know tends to bring the bulls. 30-year bond studies from Wayne Whaley shows that generally during June, we tend to see the 30-year bond yield come down. That's, of course, going to be a positive for the markets, as the 30-year yield is one of our biggest warning signs at the moment. Every time it's over 5.1, you've got to be worried. And if that happens, then we may see US dollar down, which tends to benefit small caps and international markets. And so far, US dollar down has been benefiting those. In fact, the international markets have done better than the US in 2025 so far. Speaking of doing better, wow, I'm excited by this chart. What a wild trifecta here. We've got all our faves. So we've got here gold, we've got silver, and we've got Bitcoin. And you guys can see the returns are exceptional. And I've got to say, well done, guys. You smashed it here with the silver. So silver has played massive catch up. Check that out. That thing is absolutely flogging back into getting near gold and Bitcoin. It's always awesome to see a good plan start to work out. And that's because this is a mixture of technicals, a mixture of macro, a mixture of great data. And it's everything this channel is about. And I hope you guys enjoy that type of stuff because it is replicable. And you can see here that as of 2025, you've got 3 massive trades. It hasn't just been all about stocks. Alts have worked. Now, that has not traditionally been that good. Mining has been horrible for years. Have a look here. The percentage of global equities in mining is now only 1%, record lows. There could be a massive boom in commodities over the longer term here as we go into potentially that W word that we don't like to mention here on YouTube, because there are many minerals and metals that are actually incredibly limited, and we need them for things like fighter pilot jets and all of this other stuff. And realistically, it's being cornered by certain markets. So there is a chance that actually other metals will also fly. But the problem with metals, they're not as good in terms of buying than innovation. And innovation has been what most people have made their money off over the last 15 years, because buying innovation, it's more of a surefire bet. And then, of course, is AI at this stage. And, everyone's going on, of course, quantum computing. But we've got a special on that coming up, so make sure to sub for it. Gold and silver, what's going on? As we mentioned, silver plays catch up to gold. Gold leads. It's kind of like Bitcoin. And then the alts come. It's the exact same kind of relationship with gold and silver. And silver often overshoots gold. So what that means is it goes absolutely ballistic and then totally crashes. And of course, this time may be no different. We know that China has been adding secret gold and secret kind of precious metals into their arsenal. And we can see here gold to silver ratio obviously came off that magical 100 level, which is fantastic. We also know that gold, silver tend to perform better during recoveries and sell-offs. So generally speaking, if you see a lot of geopolitical tensions, you've got a lot of fear in the world, and then you see a crash, technically gold and silver come back pretty strong on that one. I've got a lot of that stuff and a lot of my studies on that in our advanced course. Tesla, we knew it was getting a bit of retail love. 2 times Tesla ETFs. This is just the thing that everyone's doing. Options, retail. It's all about options and exchange traded funds that have lots of leverage in them. And people were buying the dip on Tesla. And as you guys know, that has so far rallied up to a very important core wall we'll discuss in a moment. NASDAQ, where are we? I tend to think we're later on in the cycle during these types of fall-offs. And you'll notice both of them, well, actually all of them, have incredible strength. And this is because the bullish animal spirits are very, very strong at this stage. So obviously we're continuing to watch this, but massive gains across the board there from those particular markets. And realistically, it's historic stuff. We've never seen this in the NASDAQ except for twice over 100 years. Now, what did the S&P 500 do over the last 24 hours? Well, it broke above 6017 and it made a new high. That suggests that, again, even if it does dip now, it's going to try to get towards that 6100, 6125, at least in the options world. Nothing's guaranteed, of course. It's always a risk, but it does suggest that the pain trade, that is the trade that people are offside on, is still to the upside. And you might think, how is this possible? Yeah, markets will do this type of stuff. They do face ripper rallies, and this one's been a bit dull recently, but technically it's a face ripper rally. There have been a couple of good bear locations. They haven't really played too hard. I mean, the best one we saw was a little sell-off here of about 3.54%. There always will be a sell, there will always be a rally, but at this stage, yeah, it looks like the rallies are still pushing through. And you can see here the updated options high-low levels for today. The key low level seems to be around where we've seen support as well. 59.87, a key level for smaller day trader accounts to be watching. And yeah, at the moment, it's a series of higher highs and higher lows when you go through the time frames. We're basically just seeing high, 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 low the whole way up. Let's have a look now at the futures, and you can see here into the options. And basically, we've got the S&P 500, 60-50 is a new call wall for the 0 DTEs. But I noticed here on the 12th, I don't know why, there's tons of puts at the 60-40 area. And then, of course, the thing starts to show the most amount of calls generally at 6100. And 6100 shows up a lot in the future contracts. So, of course, when you're looking at the options expiration of this month, the OPEX 6100 is the most struck zone. And when you're looking at pretty much anything, we're in positive gamma at this stage. So it suggests that the markets are still trying to go up. That weird put, though, as well, that put level of 60-40 will be strange. Is that some hedger coming in trying to hedge into PPI or CPI results? Who knows? Tesla is back in the zone here of positive gamma. 325 to 330 are very important levels. You'll see here, especially 330. I think that's the key zone to break through in terms of bulls. It's going against the news, and as we often say, when peak fear comes through and everybody's worried about its future, you might be thinking, I'm worried about like the 2-3 years and what Elon's doing and what Trump's doing and everything like that. The market will still react in very quick ways, and then it will kind of lull you into a false sense. So the key with, I think, Tesla this year, and we've said this many times, is looking at the options, looking at the flows, looking at the price action, and just finding those key zones. Tesla's still one of the best trade stocks out there, although, obviously holding it has become more risky in times recently. Nvidia, we can see it is all about 145, 150. 150 to me is the big call level. We close a weekly above 150. Wow. Everyone's going to be talking about it. You watch it being in the news and everyone being like, whoa, this is the next thing, massive boom, and everyone will jump into that stock. 150 is a massive key. US 30-year, no changes, still chilling under 5. That's fine for now. Bonds market, no changes, seems to be chilling for now. We keep watching it though. US dollar, you're going to ask again, no changes, still kind of in a neutral zone, waiting for inflation results. Maybe if this falls below 98.20, we could start to see really big dollar weakness. For the dollar bulls, you need to get above 140. 140 plus could be quite strong. What about gold? A little bit of replication towards the buy side. We mentioned this in our previous video. Actually looks a little bit strong. So you can see here the 15 minute looks okay. The 4 hour looks okay. We're snapping this sell candle. So get a nice 4 hour close above 3.3. 3.5 could be quite good for it. It's okay. It's okay. So gold's doing okay. Silver is much stronger, although it is starting to get exhausted. So what that could mean is that we might be in for a pullback soon, a little pullback. I think the overall trend though for silver with the weekly close and how it's looked, I'd like to see it still at 40, 42, 43, that kind of area. And it's still quite far off that. So silver squeeze still technically happening. US oil, bit of a pullback after rallying over the last 24 hours. Still in the buy area in terms of mostly looking bullish. This is a geopolitical trade. The technicals, obviously, yes, they are pushing towards the bull side, but there are risks here. So, of course, we want to be paying a lot of attention to that and seeing what's going on. And Tesla has squeezed. So what this means is it's squeezing up towards 330. We're almost at that level. 325, 330 is a good TP for people trying to squeeze it off that 280, 275 zone. And if you bought the dip here, it was calculated. Obviously, your stops needed to be below 270, and it's been a good options trade. And that's, again, been a fear trade. You have traded when everyone is fearful, and so far, you've been rewarded for that. But I think 330 is going to be a key level. Nvidia slowly moving up, not really too much to report on it, it's just dull, it's moving higher. Did end up getting a green day close, but I think semis really pushing even harder here, trying to get through that significant 263, 262 zone. And yeah, very strong. Semiconductors going up. You can't be negative on the markets when that kind of thing occurs. And ARK-K continues its growth as we've discussed this week. So basically, it's not so much ARK-K we're looking at, but hypergrowths have continued to do well. AMD, good session, up 1.24%, playing up a little bit of catch up. Intel was the big winner though, up 7.81%. So that was a huge move. I'll just show it to you. Coming off the lows there, boom. And as you guys know, this is a very key support level. It's actually the most traded zone between this and this area. So for buyers, for people that have been kind of going buy Nvidia, sell Nvidia, buy Nvidia, sell Nvidia, this is actually a sell area. So you can see previously sold a few times. And the next one is about 26. So we break high, could go to 26. Pretty big deal. I'm sure we'll talk about that in our Monday open and in our private shows. Links in the description. HSI, what's going on here? So the Chinese market continues to move higher, again grinding higher. No signs of weakness there yet. US 2K, invest head and shoulders concept. Obviously 2280, 2290 is on the upside. No weakness there. NASDAQ still moving higher. A little bit of weakness in the futures right now, 0.22, but still a series of higher highs, higher lows. 22,160 kind of the next target. And Bitcoin, as you can see here, continues to move higher after squeezing those shorts that are in probably with stop losses or not, no stop losses because they're getting squeezed now at 1067. So if the market does come down, I'm looking specifically around this 1068 area, daily 20, also some VWAPs there as well. If there's going to be buyers, I think they're around that area. But for now, it's kind of looking pretty bullish. And certainly the crypto market itself is looking bullish. We mentioned in Ethereum that if we get a weekly close like this, wow, that's going to be so strong. We are at kind of that previous res, but really look at this. Doji, 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 Doji. They're all equilibrium or kind of like neutral markets. And we know that it's been in a coiling area. So now that it's broken a new closure high, even if it pulls back, and if it does, my goodness, most traded zone, that could be a phenomenal day trade zone to be looking at, then generally speaking, it looks like the market is pointed towards, hey, maybe we're ready to move up and go towards the 3,200. Again, it's all technical, so you've got to take your statistics into play and everything like that. The big thing of the next 24 hours is going to be the CPI. We all know that CPI comes out on Wednesday, 8:30 a.m. New York time. It's expected to be 0.3% on the core, 0.2% on the normal. If you had to guess what I think, it's just been coming in kind of like normal. I would say it should come in slightly hotter, but hey, it's a guess. And even then, which way you're going to trade it? Really, you've just got to go with the flows and go with the key zones. And that's the main thing. News is an excuse to push key levels. And that's really why you see so many of these markets like the US dollar sitting right at those key levels right now. PPI on Thursday, guys, and then Friday, prelim UOM. So some pretty good technical trading, especially over the last 2 weeks since we've seen the tariff stuff die down. I think it's been pretty fun. There's been some great trade outs, silver, obviously seeing a lot of tech stocks moving, hyper growths coming back into play. Even oil's played pretty nicely over the last week and a bit, and that has not happened much in 2025. So great time to be involved in the markets and obviously looking for opportunities. And if you loved what you saw today, make sure to subscribe, smash that like button. And also if you're from Australia and you can make it to the Melbourne trading event, highly recommend you do. It's going to be a great event. It's always awesome to meet you guys, and I love to do so. Thank you so much. We'll see you in the next one. Bye for now.